Morning,
God damn it.
everybody. Welcome back to the Opportunistic Trader. It is Monday, December 17th, one of the final Mondays of the year. It's going to be an interesting week. We have a lot of activity this week. Central Bank, we have the Fed on Wednesday, Bank of Japan on Thursday, Bank of England on Thursday, and then China as well is setting their economic calendar, their projections for next year, what they're going to be, their game plan. So a lot of interesting things. What's typically a calmer time of the year. We've had volatility higher. VIX is right now trading 2084. There's a lot of uncertainty about what is going to be happening in 2019. A lot of interesting opportunities this week, especially with the Fed. Joined by This is Mike Aronovitz, and we're joined by Vince Lancy. Larry is out this morning. He'll be back tomorrow morning. How's it going, Vince?
Good morning, Mike. I'm doing well. Thank you. How about you?
Good. I'm just looking at everything, taking a look at all the markets as I come in to start the week. And, everybody's saying, oh, the market's quiet, the market's calm, which, it is relatively forward. But the bad news for equity longs is that we're actually taking out Friday's lows right now. And we're doing it in a very orderly manner. And we're doing it on no news. Right now, I'm looking S&P down 10, NASDAQ's down, VIX trading 26. And then 10-year yields are very quiet. Yields are down a touch. The 10-year is now trading 288, and we can talk more about this. But we're trading 325 or so, higher than 325, less than 8 weeks ago. The 30-year was trading above 340, over 290. So we've dropped in yields. The Fed later this week. Now DAX overnight is down 8. Europe is down 6 to 0.8%. The dollar is a touch weak, trading right now 113.50 in the euro. The pound 5. Another key week, Brexit coming up. Aussie's relatively flat. Dollar yen down 20. Majors dollar is down a touch. I'm seeing dollar 70 activity there, but and looking at some individual names, funds down 1 point. I see Goldman Sachs is down 2%. We can get into this more as well, but there's talk that they're actually going to pull charges brought against with handling of their bond issue. That story talk for weeks. Stocks down 33. Very ugly performance. What's on your radar? I see gold up $4, 12.45. See the dollar's a little weaker, so maybe that's working there. But what's your thoughts for today over the weekend?
Well, precious metals are probably not going to be where the action is. If there is, it's going to catch you by surprise. But I think your report last week, for this weekend report, touched on something that should make this week an important week. I think it was the lowest weekly close since March 23rd, and also I think the lowest daily close since April 5th. And it might behoove us to take a look at that, because the last time we were there, we got bailed. I'm not saying someone bailed us out, but the market rallied. It got choppy a little bit at the end of March, beginning of April. Then the market rallied, but I don't see that happening yet today. So maybe newer lows are in order. I'd like to buy the market, but not on new lows. I'd rather buy strength coming up through Friday's close, going higher for a counter trade, because I still think the end of the year is going to be dragged higher. Um, but the There's a lot of disconnect, I think, in the markets, because and it's good for short-term traders. By that I mean, if you're looking at, say, a VIX versus S&P correlation, or a S&P versus Nasdaq correlation, you're probably going to see a lot of disconnects, and those disconnects may snap back in 2 weeks after the end of the year. But if you're a day trader, I would not be leaning into disconnects like that, because people who are trading now trade because they have to, not because they want to. So that means end of year people who have some profits are going to be closing out so they can get their bonuses. People who are about to get fired or there's redemptions coming in, they're closing out. I think there's a lot of opportunity in short-term trading if you don't lean too much on your traditional indicators. If you do want to lean on your traditional indicators, think in terms of weeks, not in terms of hours or days. So, like for example, right now, uh, uh, I show the VIX as up, trading 23 at spot, right?
Yep, that's what I got.
Okay, good. So that's up 6%. But that's really nothing in my opinion. But the S&P is down, or the ES is down. Did you say 10? Because I have.
Now we're down 12 and a half. We're right on the day's lows. We're trading 25.90. The low is 89 and a half.
Right, right. So the VIX isn't up as much as I'd like it to be. So maybe someone who wants to fade the sell off may say, "Oh, the VIX isn't popping as much as I think it should, so I'm going to buy stocks." That might be a really bad play today if it normally is. If it normally is a good play, because I don't think there's a lot of people out there adding to positions.
Well,
People are closing.
That's one thing Larry's been looking at. He's actually looking at VIX to trade lower with stocks possibly trading lower. So, based on also the fact that this activity is going to start to slow, especially after this week, after the Fed, things like that.
Yeah,
Um,
yeah. That's actually a really good point, to just to color in the lines on that. Uh, the VIX may continue to be. I want to say that I want to start with that thesis as being true. Stocks could trade lower and the VIX could be weaker. Well, right now, stocks are trading lower and the VIX is underperforming a little bit, in my opinion. And but it's not underperforming a lot. It may get slammed, classically get slammed after the Fed. So we could have the VIX up 1%, from 22 to 23% on the lows here, and then the Fed comes out and the S&P rallies. Let's just say a small rally of 30 handles, as opposed to 60 or 90, and the VIX come crashing in about 6%, from 23 to 16. So I think uh, uh, it, to Larry's thesis, it says to me that there's going to be pressure on the VIX both ways, and it just tells me that selling vol. Uh, uh, in a prudent way might be the play as people unwind for the rest of the year.
Yeah, well, also on that, you just mentioned volatility. I want to remind everybody that if you didn't see it on Friday, Vince had a great segment on how to profit from volatility and different strategies for that, and that's available in the replay tab. And then also on that note, today at 11 o'clock, we typically get in the schedule a little later, but today at 11 o'clock, Vince and Tom will be on talking about options trading and different opportunities there. They go over typically a strategy or two and different ways of expressing it. So that is today at 11. And then we also have Tracy Schuchart will be coming on at 10:30, displaying her screen, looking at technical analysis. So that's going to be what we're looking at today with webinars. But the key thing people are definitely starting to talk about is the Fed and what the message is going to be, because we're expecting a rate hike. The odds were about 100%. 2 or 3 weeks ago. Now I think we're closer to about 75-ish% or 80%. But it
Yeah.
seems like consensus is they will hike. And so the question really is, though, what makes it interesting is what the tone is after the hike, what the message is, what the press conference is saying. Are they going to be hiking again? At one point, 5 or 6 weeks ago, we were expecting 2 to 3 hikes in 2019. They then changed it to more, toned that down in the markets down to less than one hike in 2019. So that's going to be key to see what they say and what they kind of relay to the markets. They definitely said that they are more on the data dependent side. The real question is, are they going to be stock market dependent or data dependent? Because the actual data in the US economy continues to be strong, reflecting them continuing to hike. That said, global economy has been slowing down a bit, and the stock market's obviously come off globally. So we'll see what that plays into it. And of course, also the White House has been very vocal about not wanting the Fed to continue to hike. So, a lot of interesting things shaping up for this week.
I agree with that. I like to add a little color to that concept, and then we'll touch on what Donald Trump just just said. He had a tweet that Tracy just put in there that we caught. Um, I think it's important to note that um, with the data that's coming out this week. Okay, well, this is purely my opinion, and you can trade accordingly, trade around it, trade with it, trade against it. I think the data that's coming out this week is just going to confirm Powell's bias towards hiking. Number one. Number two, um, Powell has all the cover my meaning camouflage he needs to back off on QT if he wants to. He's got lower oil, so he can't complain about inflation. He's got global crises elsewhere, so he can help them out there. He's got horrible housing numbers. He's got all the cover he wants to back off on QT, but I don't think he's going to because uh, and this ties in with your point about data versus stock prices. The Fed is always data dependent, and I say that facetiously. Uh, Yellen was data dependent. She only looked at jobs because that was her excuse to keep lowering rates. Um, uh, Powell is data dependent. He's only going to look at things that justify a strong economy. However, and this is where it gets important, at what point does the stock price affect the data? So if you look at stocks as a reflection of the economy, which may or may not be true anymore, uh, it's okay to say, justifiably so, it's okay to say, oh, if we trade 2,500, it's flat or only down 1% on the year. The data still says the economy is good. But if we trade down to 2,000 and the data is still good, well, yeah, you could just be letting air out of a bubble by going down to 2,000, but you will shut up liquidity in the U.S., which would exacerbate the global problem. So I think it's a matter of coming up with your own numbers. So he's data dependent, and he'll look at the data to justify things until there is a number there that there is a Powell put. I think the Powell put is between 2,000 and 2,200. I don't think that there is any relief coming in sight, and I think that uh, uh, putting that in its place in a corner there, I think your comment about Fed hike being very high probability, 75% to 100% this week. The Fed futures may be pricing in, but I think the stock market has a lot more hopium going on. So if it's an 80%, I put 20% in it, meaning if the Fed has an 80% chance of raising rates this week, then the stock market is only factoring in a 60% chance. There's always someone selling someone to buy stock. And I just think there's a lot of people out there that are in stocks hoping for uh, some sort of surprise.
So you
But the
actually
bond
think
market,
that so you don't think the market is basically 80-90% priced in. And by saying that, you would expect potentially, if they do hike rates, that there might be a negative initial knee-jerk reaction?
oh, wait, if they do, I believe that hope springs eternal in stocks in general because the market structure, for many reasons, the market structure is biased towards being long stocks. Salesmen don't tell you to sell stocks; they tell you to buy stocks. And I think that there are in a vacuum, the stock market will always reflect and I'll say why I say always, will always reflect more bias to the upside than the bond market. For example,
Yeah.
if you are bearish on a company, the big players don't short the stock. The really big players do credit default swaps because you can't short a stock and make money because there's short squeezes, because there's liquidity crises. But a credit default swap is a true indicator of a market of a company's value. And all I'm saying is that if the big players are looking at Fed futures saying the odds of a Fed hike are 80%, then the little players don't even know what a Fed future is. And they're like, oh, maybe the Fed won't hike anymore. And so there's a 60% chance. I just think that there's more hopium in the stock market than there is in the bond market.
No,
That's
that's
all.
a good point. That's a good point. I was just saying that my personal opinion is they're gonna hike, and then when they hike, there will be very little reaction. The reaction is really going to be in the comments that accompany the hike, and then the press conference after. If they talk hawkishly and focus more on where inflation is, focus more on GDP, focus more on unemployment, and less about the global economy, less about the stock market, I think that would be and possibly talk about still hiking 1, 2, 3 times next year. That might weigh on the equity market. And
Right.
whereas if they just really say, hey, we feel like we've reached where we need to reach, and we're 100% data dependent, and we're really looking at the global economy. We're seeing some headwinds, especially not knowing what's going on with the trade war with China, things like that. That would be probably supportive of the markets, because that would be seen as the markets saying, the next move for the Fed might actually be a cut.
I agree. I agree. I don't doubt that. I don't doubt that. But I don't. I agree with you that that's all like biased to the upside, potential events. I just feel like every event is overhyped, and then when the event happens, stocks don't reflect the potential negativity as well as bonds do. That's all. I don't mean to interrupt, but I do want to say what read the Donald Trump, because it is market related. Trump tweeted 22 minutes ago that it is incredible that with a very strong dollar and virtually no inflation, the outside world blowing up around us, Paris is burning and China way down. The Fed is even considering yet another interest rate hike. Take the victory! Exclamation point. So um, Donald Trump is again pushing on Powell uh, uh, to not hike rates. My take on that is Powell's going to hike rates, and for Trump to say that, he's very good. I've known the man's work behavior when I worked in New York for years, and I'm not saying I worked with him. I worked with people who worked with him. He is preemptively giving himself a hedge. He is already putting it out there without saying it. He's saying Powell shouldn't hike rates because he knows Powell's going to hike rates, and for the most part. And when Powell does hike rates, if the stock market sells off, he's going to say, "See, I told you." And if the stock market rallies after the rate hike, because it could be the last one, and everyone thinks that's the end of it, he could say, "Despite Powell's rate hikes, my economy is doing great." He's just great at doing that. Although it won't work, I think.
Yeah, well, he's also getting in front of it by being able to pass the blame. I told everybody don't hike. It's the Fed's fault they're hiking. Tracy put up a great chart in the Q&A tab showing Dow versus the Dow Jones Transportation Index, and the Transportation Index. If you go back to the books that you'll read in school and everywhere else, it'll typically tell you that the Transportation Index is a leading indicator, and it's significant underperforming the Dow. And you look at the transportation, you look at the home builders. There's
wait, Mike, I got to cut you off there because your own weekend report discussed this indirectly. You put the year to date, and I made a special note of that to myself. I went, oh look, techs are down 18%, but they're still up 1% on the year. Transports are down 18%, and they're down 5% on the year. Housing is down 30%. It's down 20% in the year. And I looked and I said, I remember the old Dow transport non-confirmation. We used to call it non-confirmation. There's probably another Dow theory, I think they call it. Maybe the techs are the Dow theory now. But the point is the techs and the transports are doing the same thing. Look at the overnight report. If you want to put that up on the screen, it says that. And it's actually, it says that in numbers. You can actually see that the transports and the techs moved lower the same way. Not the same amount, not necessarily the same way. Techs dropped a lot faster and more volatily, but I think it's stuff that you actually kind of covered in a cool way when you put up that information. Let me put up a chart. Oh, technical analysis. There you go.
As you're plugging other things that we sent out over the weekend, we did send out a piece that kind of detailed month to date, quarter to date, year to date returns that were interesting. Gary Holland put together a great looking chart, which I was emailed out separate. Actually, it wasn't emailed out, but it was messaged out, and it's in our Insights tab in the equity and also macro. It's up for everybody to see right now. You can take a look at 2008, the S&P 500 in 2008, and versus how it looks right now. And on a technical basis, the retracements, the price action looks very, very similar. And so, I think the title of his post was, "Have we seen this movie before?" even references that you can't always take a look at past price action, but it does look very, very similar. And if that is true, it's shaping up to be an ugly 2019. And if that chart pattern unfolds, it would have to be that there's some sort of acceleration in the trade spat between U.S. and China, and that global economy really underperforms.
Which I think is which I think the trade spat's going to last forever, but it
Yeah,
doesn't mean
well,
we won't
that's
have.
that's part of it. I actually heard an interesting article or interesting comment this morning that they were saying that in 2020, if Trump does back down and isn't very tough on China, that's going to be really one of the key political points in the next election, is what we're doing with China over the next 8 years. And so this
The
what
Democrats should run a Chinese American person, and the Republicans. I'm sorry. I had to say it. It would be it would be like a trade war on stage. Anyway, I'm sorry. Go ahead.
no, that's an interesting thought. Hey, you should write the DNC.
There you go. I do have a level that I think is tradable on the ES. Um, I have a sell signal below 2601 spot 68 on the hourly. So feel free. Well, you could consider being short below there and being flat at that level. The reason I like that level, aside from it being a VBS alert, is that it's coinciding with a new low on the hourly. And if we go back above, if you're looking at an hourly chart, the hour of, say, December 16th at 6 p.m., um, uh, 12, 6, 4 p.m., or 1800 hours, you'll see that we're hovering right below that low. So you could consider being short below that, or you consider getting long above that. But I'm going to give myself a little bit of room, and I'm looking to short the S&P below 2601 spot 68, and holding it for 2 to 4 hours, as long as it stays in the money. In the money, by that I mean below the stop of 2601 spot 68. Risking maybe 10 to make 20, that type of thing. I do think if we whip through that, it could be a very, very strong rally. But right now, I've got a signal to sell. So when we get off the line, I'm going to probably short this.
Interesting. Yeah, like I said, Larry is actually out today, but he will have some trading signals coming up, I'm sure. He actually might join audio from, remotely. But I know his general thoughts. We spoke earlier. He still continues to lean bearish. He's not short officially at the moment. He's looking for an opportunity to get short, and he also likes the pair trade of selling S&P and also selling VIX. But he's not selling here down 12. He thinks on a spike back above 2600, close to 2605, 10. That's the sort of range that he's looking to sell. He doesn't have a strong view at the moment on the dollar. That'll be interesting to see how we trade coming into the Fed over the next few days. Crude oil, I think personally, it's going to be interesting to just watch crude, because we've gotten above $53 a few times last week, but both times were sold off very heavily. So any sort of rallies, I just want to watch the price action to see how we trade in the afternoon, to see if we sell in the afternoon, because I think that's telling. We've been getting heavy selling in the afternoon, so let's keep a close eye on crude. Even right now we're trading 51.66, up 20 cents, which pretty tight range, especially given where we have been. The range overnight is 51.38 to 52.15. So let's see if we can get above 52 and hold it. That would be really important for the bulls. And I know that Tony Greer, who's on our site often, and he's going to be coming on, I believe, tomorrow, but I'll confirm that. But he's been very bullish crude and energy. He's actually structuring portfolios long energy, short technology, short social media, things like that. He'll get more into that, but just last week when I was speaking with him, he was talking about adjusting his portfolio more for that, buying some energy, selling technology, selling.
So short paper assets, like Fisher was saying, and long real assets.
Yeah.
Similar idea.
Yeah. So that's one thing he's looking at right now. But he's bullish crude. I want to see crude trade above 52 and actually hold it, and then trade above 53 and hold it. So we'll see on that one. And then
Tracy commented it's a rollover in crude again today. So we have a rollover. So It could be a chop city depending on the contract you pick.
Well, we had
As
I'm looking at Feb right now. Feb is 51.67. The Jan options rolled off on Friday, so I'd
right, so the
expect most
futures
people
go
to
off today.
start. Yeah, so we should start to see front month volume beat Feb.
Right. But
Um,
if you're looking at January and it's on your screen, just don't be fooled. There could be a major disconnect in the market today. So Jan could rally $1.50 and Feb could go nowhere. It's just one of those days where you're going to have a disconnect.
Tracy's
But
active in the chat. She'll be on with us at 10:30. She was on last week, Monday as well, I believe, or Monday or Tuesday, and she, really took us through all the charts. Did a great job, and I want to get an update. She was very bearish equity. She was actually looking for before Christmas, trading down to 2460 or 2470 level in the S&P, and then moving back up after Christmas. We actually moved higher in equities, but you can see here we are lower than where she was talking, and the volatility that we've been seeing, it's very possible. So I want to get an update from her if anything's changed technically, anything's changed on what she's looking at, because this right here, I find this is bad price action because it's not like we're just grinding lower right now on low volume and on no news, and it's not like a spiky sort of we're trading right here at 25.88. This would be one of the lower closes the entire year. On a weekly basis, the cash market closed at 25 like 99 and a half. That was the lowest close since March 23rd. And remember, it was February where we had all that volatility. But even in all that volatility, we did not have many closes below 2,500, under 4 or 5. So we're going to keep a close eye on this, see what happens here. Vince, any last thoughts? What you're looking at, key levels, markets?
No, just the S&P and I think I'm taking note of oil. Just looking at the daily chart, it really looks tired, or I should say, the hourly chart really looks tired. Um, Actually, the crude daily, if you look at say uh, December 4th, 5th, 6th, and 7th, see these long wicks in there, and three of them are above the market, one is below, and I think there's some trapped longs up there, and uh, I'm not friendly to the market until it gets above that. But that said, I have no feel for it on the system right now. That won't be there for a while. But right now, I'm just looking at short in the S&P. That's pretty much it.
All right. Sounds good. All right. Well, this is the AM roadmap. Larry will be on later. He just messaged, so he will be on later. And then the schedule is Tracy taking us through the technical analysis, giving us an update on what she's thinking into year end. And then Tom McEntee, Vince Lancy, Option School at 11 a.m. And then Larry will be on in the afternoon. We'll also have some updates in the afternoon, and then we'll also have some replays of some popular recent webinars in the afternoon. And then we're available in the chat. Anybody has any questions, just let us know. Talk to everybody in a little bit.